Ladies and gentlemen, welcome back to the channel. Since we are now in 2023, congratulations if you survived 2022. It was definitely a rough one, but hopefully 2023 is going to be a whole lot better. And we need to discuss here in this video potentially where AMC stock could go, kind of where the markets could go as well, some things to watch out for, and some things that are extremely positive for AMC. One of the biggest ones being the valuation looks a lot more compelling here and now with the innovation and the new products and services AMC is launching. It looks like if you're buying the stock at these levels, it's going to be very hard to lose money in 2023, guys. But there is a small caveat there. So let's get into all of this cryptic information. Hit that like button and subscribe to the channel if you haven't not already, guys. So first things first, AMC. I'm going to assume you guys know the story, what has been going on, especially as of recently. You've had this reverse stock split news. You've had the fact that some creditors were going to try to revolt against the company, essentially try to split up their assets in case they go bankrupt, blah, blah, blah. Scared investors. Really, all of that was BS because it wasn't even about AMC Entertainment. It was about AMC Network. So a lot of confusion there. It has definitely helped to push down the price of AMC. Now, in the process of all of this, the actual numbers for a short squeeze, cost to borrow rates, the short interest, have been getting better and better. And that is because your actual risk to reward profile on AMC has gotten much better. For an example, do you think it's more risky or less risky to buy a stock at its 52-week low? Well, if you believe in that company, if the data makes sense, depending if it's a short squeeze kind of trade or a fundamental trade, it makes usually a lot more sense to buy the stock at its 52-week low rather than to buy the stock after it's already running up. And that's especially true for AMC. If you have been someone that has watched this channel over the past year, one, you either love or hate me, right? Because we're really good at calling rallies before they happen, but we're really bad at trying to figure out how high those are going to go. Sometimes we've been right, sometimes we have not been, but we usually call the rallies from the bottom before they actually happen. So if you've been somebody that has been buying the stock at its lows, right, 52-week lows, then you've probably done better than someone that has been buying the stock after it's already rallied, right? So in terms of that, it looks like AMC is in a bottoming process, and it'll take a couple more days to actually confirm that at the least, at the bare minimum. But risk to reward profile looks a lot better now than it did even, after this first rally in November, right? After this last rally, I should say, where we got above the 50-day moving average. If you bought the stock at these levels, granted, I thought the stock was going to go much higher. It looked super good. We did not. Well, I think now's a pretty good time to do so, considering we're a lot lower than those pre-November lows. And that was also a 52-week low at that moment, and you would have gained over 100% by buying the stock. So there you have all of that information, guys, and we're going to dive into the data here, right? We're going to get into the Ortex data, Stonko Tracker data, more in-depth look at the technicals and some of the technical indicators that we are currently seeing, but I also want to acknowledge kind of what everyone else has been saying. All of the financial analysts, Bank of America, Morgan Stanley, JP Morgan, they all are in pretty much unanimous agreement that there's going to be a lot of pressure to the markets to the downside in the first half of 2023. And that is because your earnings year over year, not going to look so good, right? So in the same fourth quarter period in 2021, that's going to look probably a lot better than the same period in 2022. And that's going to put a lot of downside pressure on stocks, fundamentally speaking, because your Apples, your Microsofts, not necessarily your Amazons or Googles now, but some of your stocks that control 20%, Apple and Microsoft, that's 15% almost of the S&P 500. So if they have bad earnings, it could bring down the whole markets, and you still need to see earnings expectations coming down. So as we've seen throughout 2022, AMC doesn't necessarily have to go down with the broad markets, but when there is a lot of weakness in the markets, it doesn't tend to be a positive thing for AMC more times than not. More times than not, when the markets are down 3%, AMC is also down, 3% or more. But has been some encouraging signs as of the last couple of trading days. Apple, some large tech stocks going down, 3 to 5% in a day. AMC not quite going down as much. So a lot of back and forth here. Overall, I would expect some downside pressure in the first couple of weeks and months of 2023. And that's really a toss-up. If that affects the stock to the downside, tough question, because when valuations are in question, then not everything has to go down, especially something like AMC that's already trading around that fundamental valuation. But it could mean stocks like Apple, the broad index, could come down a lot more because they still have a lot of that froth left in them, guys. So there is all of that. Really, the long answer to all of this packed you guys here in this video. Now let's get into some of the data behind AMC. If we go ahead and pull up the Ortex data, take a look at the cost of borrow rates and the short interest first. So short interest of free float sitting at 21.47%, so basically 21.5%. Super high, guys. This is super high in regards to short interest across the markets. Anything over 20% is extreme, and puts a lot of pressure on shorts if the price of the stock does even make the slightest move to the upside. You can compound some losses pretty quickly when you're at 21.5% short interest. It's sitting on about 110.5 million shares that are sold short. Again, a very high number, especially given AMC's volume as of recently has been 20, 30 million on a high volume day. It does make the days to cover go higher. And that is something that is also a big factor in a short squeeze, because it's telling you how long it'll take for shorts to get out of their short positions. Days to cover currently sitting at 6.73%. And when you guys look at the chart of the actual cost to borrow, let's just pull up this last 6 months. I mean, this chart might be kind of hard for you guys to see unless you expand your screens or zoom in a little bit. But it's been pretty much straight up, guys. And this is no glitch. This is, what's actively happening. And this is even higher than the levels that we've seen before and during that rally in November. You're much higher than that now for the actual cost to borrow rates. And what they are, last we knew, the cost to borrow average was 274%, cost to borrow max 305%, and the cost to borrow minimum at 7.26%. But you're seeing live numbers from Interactive Brokers telling us that, it's about 116% short interest. And these are some live numbers that people are actually taking out positions at. So, puts a lot of pressure on shorts, and a lot of these positions that they're taking out, these short positions, when they lend out stock, it's not usually a fixed loan. It's a lot of the time it's adjustable, right? It would be like, I guess if you sold short Tesla in 2021 when the stock was going straight up, a lot less of a risk potentially the stock goes down, or that you wouldn't be able to pay back your short position if the stock went against you. There was so much positive momentum. Makes a lot of sense why cost of borrow rates would be low. Not a lot of people want to lend out stock, and there's a lot of shares that could be lent out. Now, right now with something like Tesla, it's a lot more risky to sell the stock short, so you're going to get higher cost to borrow rates. And that's how they kind of vary, right? Especially for some of these hedge funds that have been in their positions for a long time or got into them with a lower cost to borrow rate. It can put a lot of pressure on them very, very quickly. Now, taking a look at the option activity, it has not been good. Over the past week, 213 orders totaling $117.5 million. Positive order value of 6%. So no bueno at all as far as options are concerned, for good reasons. Like I said, you got earnings pressure, you got potentially the market heading down in a big way in the first half of 2023. That's the overall market consensus here. And from just looking at AMC and some other speculative type stocks in the markets, it makes a lot of sense why some people are opting for those puts, but even buying puts at this price doesn't even make sense. These are a lot of large hedge funds that are probably, in my opinion, we've talked about this before, but trying to make it look like they've actually covered on their short positions by buying these deep in the money puts, because a lot of retail, a lot of people that actually trade the stock, they're not buying deep in the money puts. They're not buying $6, $8, $10 puts most of the time on something like AMC. So that was a big running theory of mine. Let me know down below in the comment section what you guys think about that. It makes a lot of sense, specifically with some of those super large option orders. Like we're seeing $25 to $50 million trades on AMC put options. That's definitely not retail. That's doesn't make a lot of sense for a hedge fund to do that if you didn't already have a position in AMC, potentially a short position, right? So a lot of these things, you know, are affecting the stock. And I think in 2023, especially given, you know, with tax loss harvesting that is now done, that could also lift off a little bit of that bearish pressure on AMC. But obviously we'll have to see. The markets are closed tomorrow, so you know, it's going to be Tuesday before we kind of see that. And the markets, AMC, might be able to move a little bit more freely until we get either good or bad news, guys. So as far as option activity for this upcoming Friday, it's going to be January 6th. You do have about 9,000 calls that are currently in the money, about 44,000 calls that are out of the money. For the put side, you have about 12,000 puts that are in the money and about 23,000 puts that are out of the money. So, you know, still a lot more calls on the option chain for AMC for this Friday, but you know, relative to the calls, there's still a decent amount of puts. If the stock does make that move up, the ratio of calls that are in the money to out of the money and puts that are in the money and out of the money, you know, you might see more aggressive delta hedging to the upside rather than the downside. And especially because from the looks of it, AMC is starting to make a bottom formation with closing at a higher high than where we opened over the past couple of days, and trending higher ever since December 28th. Not that much higher, but you know, something we're talking about. We hit that low at $3.81. Now you're trading at $4.07 per share. The move in after hours brings us down to $4.03, but that's a pretty decent move up from the 52-week lows, and that gets us away from those 52-week lows, meaning we're going to have to see another pretty bad day to get to a new low. And that's part of the bottoming process. So if you are in the actual bottoming process, it might not take too long, you know, to get some gains in your positioning, right? Now, as far as the most recent technical indicator, we are getting a relative strength index flag. So what this means is you did see an abnormal kind of oversold reaction in the RSI on December 28th to immediately snap back up to still oversold, but above that statistic oversold level, right? So 30 is oversold, and you guys can see this down here by my cursor, hopefully. And this blue line going under the yellow line is that severe oversold level. Well, as of right now, we popped up, and you are now above that by just a little bit. So with all things considering and the way the price of the stock is reacting, definitely looks like you're getting closer to a bottom. And if you're looking for a long trade on AMC, looks to be a much more compelling level now to even do so. You know, over the last couple of weeks, it's been pretty much straight down, guys. So there is all of that information. Like I said, as far as volume, it has been very low. So as the new year starts, you might see more volume go into, you know, let's say the Russell 2000 or the Russell 3000, in which we know AMC, one of the larger, if not still the largest components of those. You might see some reallocation, and a lot of it could go to AMC, because how a lot of hedge funds work is they'll be, you know, set a certain portion of their portfolio aside for small caps or mid caps or large caps, and they can kind of get offset, right? So a lot of hedge funds have been really overweight in energy and healthcare and a lot of these things that have been doing decent in 2022. Well, now what they have to do, now that we're in a new year, is to kind of rebalance their portfolios, push some of that money away from what was working into what wasn't working in 2022 to kind of get that balance back. And even the fact AMC is a part of the Russell 2000, the Russell 3000, could make for more buying pressure on AMC. I'm not going to go out to say this is going to cause a huge rally, but I think it will be more than anything kind of bid support for the stock. It'll keep us off of that new 52-week low until something bad happens, until we get bad earnings from Apple, Microsoft, Google, Amazon, right? Until that happens, I think these are bullish factors. And if I didn't have a trade in AMC, right now looks to be a pretty good level of confirmation for an upside trade. We'll have to see how the next day or two does play out trading in the markets. Nonetheless, that was the last bullish technical factor that we did see, and AMC is not going to have earnings for quite a while here, guys. AMC's typically the second week after earnings really start. So after you get Apple, after you get the large guys, AMC tends to report their earnings. And Apple, these large players, they're not going to report their earnings till the end of January. So between now and then, there's a lot of time for things to get a little bit crazy with AMC stock, guys. So that is going to be it for this video. That's really all you guys need to know as far as just the overall picture with AMC. What I'm doing, I will look to make some bullish trades on AMC, especially if we do have a green day on Monday. And what I would really target at the bare minimum is going to be like $5 per share. This is the last 52-week low that we had seen until we broke under that, went down right here, retested it, and then got rejected after all of the reverse split, all that crap started to come out. And I think if things get decently good or just stay okay over the next couple of days and the next week, you might get that move to that level, to that $5 level. I think that's a comfortable price for AMC fundamentally. And to the extent that we go higher than that, depends on the data, depends on sentiment, depends on what happens. Nonetheless, it makes a lot of sense to be long here on AMC. I am not a financial advisor. Come to your own conclusions on all of this information. If you need help and you don't understand, then I would definitely contact a financial advisor before investing your money, because 2022 is ruthless. 2023 probably going to be equally as ruthless, potentially, hopefully, in different ways affecting different sectors. But nonetheless, that is going to be it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Most importantly, you guys enjoy the rest of your day and have a happy new year.